This channel is for educational purposes only. Please do your own due diligence before making any investment decisions. Hi, this is Joe Rabil. We're going to give you a stock market update, and I want to talk about a market that just refuses to go down for any length of time. Now, there is something that is fairly crucial to mastering the 1-2-3 reversal technique. You need to understand what time frames you're looking at and what direction they are. So I'm going to go through that, and then we'll go through the different time frames and we'll look at the market conditions. But what's taking place right now, pretty crucial in the shorter term time frames to understanding the 1-2-3. All right. Now, if you have an interest in learning more about these techniques, you can start with my book. Actually, in the description below, I have a place where you can click and it'll take you directly to this page. So go ahead and do that if you have an interest. Also, if you do enjoy this content, please hit the like button and also subscribe. Okay, so let's go ahead and get going here now. I'm going to get into the 1-2-3 reversal and the keys to using that with the trend versus against the trend. But I want to start out with the market conditions, and I got to tell you, the sentiment drop is a big concern for someone who's looking for the market to drop. I just don't see. I mean, the number of bulls dropped and the number of bears went up. We went from 14% more bulls than bears. Now we're at 10% more bulls than bears. Still in the neutral camp, but the fact is that the market is pushing higher and people are not getting more bullish. It's kind of a rarity to see this type of reaction based on the sentiment, and that leads me to believe that we're going to have to push higher before we see any kind of a real correction or consolidation. Now, it might just go to a marginal new high, and that'll be enough to flip over to people and have some people throw in the towel and turn bullish and buy on the breakout. We'll have to see. That would probably happen next week because I think we're getting really close to hitting that new high. So anyway, I just thought I'd mention this. It's pretty important right now what's taking place, because I think until people flip over, remember at the low here, we had a significant amount of bears. Everyone basically threw in the towel and got bearish. And now we're waiting for the opposite to take place to expect a correction, and just haven't seen it yet. We are overbought on the RSI 5. That's a short-term thing, but it is important to recognize where we get deeply oversold back in here when we were down. So these were both positive. The overbought was down low, and we had a massive amount of negative sentiment. And so these can be little trading signals when these are in agreement. All right, we haven't had that since the low. We're looking for that to take place again. I'm assuming at the high we're going to have an overbought condition and the sentiment's going to turn too bullish, right? So we always want to look for that as a potential opportunity inside the range. It doesn't necessarily have to be a trend trade. So we're looking for a retracement now, but that signal has not come to fruition. All right, now volatility is remaining the same, but we can see how this our ATR on the weekly chart has dropped. I'll go into that a little bit more in a second. One change in the trend and momentum is that I switched the momentum for the weekly to neutral. So we're at that stage now where things have pushed up so much that we're starting to see some shifts, and I'll go into that in a second. Again, the trend hasn't changed. We still have a positive trend for the monthly and the daily, and the weekly is neutral. All right, let's take a look at the volatility. So the volatility keeps dropping, and we're not getting the little pop that I was expecting because this has gone on for so long. I do think we're probably getting close to something like that taking place, but again, now I would sort of assume that we need to go to a new high first. I don't think we reached the high yet. We're close. We're really close, but we haven't hit it yet. Certainly this morning, Friday, the futures are up a little bit. So, it's possible we'll go ahead and see that happen today. But right now we've got lowering a declining volatility situation on the daily and a rising on the weekly. All right. So we have to kind of abide by those right now. And what that means is that you can trade weekly, dailies, or shorter term trades, but you probably need to be a little bit more nimble based on what's taking place. Now, if this keeps dropping, that can improve the overall situation. But as I've mentioned, if we're going to play out like 2020, then maybe we break out and then we get the consolidation pullback pattern with the declining volatility, and that sets up the next. This to me is the run we don't want to miss, right? I mean, if we're getting a run like that, we want to be able to take advantage of it. There should be a massive amount of stocks that look great if it plays out like that, right? So don't worry about, not necessarily being involved in a bunch of stocks right off the low. Obviously, if you're following your plan, you probably have caught a few, but the reality is that the way this has V-bottomed, it's not always going to set up in a way where you get good risk reward characteristics in your buys, right? So because this thing has gone from basically straight up, and when that happens, and if you think about it, I mean, if you're just thinking you want to buy along the way, your stop has to go way down here. Well, we need an intermittent pause or pullback to improve the risk reward conditions. Remember, it's not low price, it's low risk is what we're looking for. All right, let's switch over to the 4 time frames. I do want to get into these two type time frames. I do want to also point out that we've made it back to the highs. Now, again, it's pretty rare to get the overrun and not get some form of hesitation. So again, maybe it goes to a marginal new high and then we get some kind of a hesitation back. It's also possible that this is just a bad signal based on massive volatility in the market with the tariff news to the downside and then the tariff news back to the upside. All right. It was almost like a head fake in a way, the way it played out. And, these are just not quick enough to catch up. With price coming all the way back, it closed back above the moving average and it didn't affect the moving average at all. Right. So, we might have to see how we react here. Most of the time, we're going to see some form of a retracement or a pause or hesitation with that signal. Now, I moved this to neutral because MACD is now back above the signal line on the weekly chart, above the weekly zero line, and the signal line is also above the zero line. RSI, I'm sorry, the ADX has dropped down, and we're in a contraction phase on this time frame. I mean, on this indicator now, but they haven't crisscrossed, and green hasn't crossed above, hasn't done anything meaningful to the upside. So I'm not going to turn this bullish. Obviously, with this last reading being very negative, it's also starting to look a little climatic in the way that it played out. But right now, we're just going to go with neutral for the momentum. Now, let's just look at what's taking place. And last week, I went into the potential for a 1, 2, 3 reversal taking place. All right. And, so that's important. I think it's important to recognize that when we have a 1, 2, 3 develop, right, we make a 1, 2, 3. So the 1 is the break of the trend line. The 2 is the test, and 3 would be taking out this low. All right. Now, if this takes place counter to the next higher time frame, these lines are going up. I mean, I've already said on the market conditions, this is a positive trend, right? The trend is up on this time frame. So if we're doing that, that means we need not only to really confirm a reversal, we need not only that, we need another lower high and another lower low to truly confirm. Now, I know we talked about the potential for playing as a short play or something like that. And, the problem is if you look at it, and let's just zoom in for a second. I mean, it was down there for all of, I don't know, a half hour or something like that. I don't know how long it was. It's an hourly chart. It didn't close below that horizontal line. So we don't, I think we have to recognize the extreme volatility and the fact that it got down below there but didn't have any follow through. And if you notice, when it actually got below there, it was forming divergence in the MACD. So we didn't have any real strength in the, we have a lot of volatility, right? Look at the volatility. We've got this red going crazy, but it's not breaking out, and it's not causing the blue line, the ADX line, to go up. So, when we have that kind of situation, you probably need to give it a little bit more room, but we also need to understand, if we're getting a 1, 2, 3 in the direction of the trend, then we can actually play off the 2. And I actually mentioned last week that I didn't have a problem, and I still don't. If you did the RSI sell signal, which happened here, I actually like that as a hedging technique. I like that better than doing this here. I'd rather do this right here. The risk reward is way better. You get a little move down in the direction of the trend. I recognize that we're doing it counter to the higher time frame. But if we want to play this type of pattern and use it as a hedging technique, that's probably how I would go about doing it. And then if we don't get the follow through, then you basically scratch it. You take a small loss. If you're waiting for a little bit more confirmation, you take a small loss. But in reality, I think that's probably a better way to play that. Now, if I'm playing to try and make money in a trading play, I might take this signal, but I'm looking for a little bit more confirmation, especially with the way the momentum conditions were set up. I would probably make it close that way or something like that, or maybe even go down to a smaller time frame. So if I'm looking to play this to the downside, and I know I'm down 2 or 3 bars in a row on the hourly, I'm probably going to wait for some kind of a little rally on the 10-minute to get a better entry. All right. So I like this signal from a hedging standpoint. I think that's a better, the RSI signal here before we get the completion of the 1, 2, 3. But if I'm playing for a, reversal trade, and understanding a true reversal counter to the trend needs more confirmation. I wanted to make sure I made that point. Now, if I were playing this in the direction of the trend as this pullback takes place, I only need the 1 and the 2. A 1 and a really good 2, or a 1, 2, 3 to the upside is confirmation in my view. That's how I teach it in the course. If we're playing for an upside move, we don't need as much confirmation because this time frame is to the upside. I hope this makes sense. Let me know if you have any questions. Thanks.